Hi, my name is James, and this is my analysis of Boeing Company.
Boeing is a global aerospace company that operates across two key segments: commercial aircraft manufacturing and defense, space and security. The stock price has rallied steeply this year with strong price momentum after successful launch of the 777X and large orders to replace existing commercial airline fleets. It is widely regarded as a buy, however, I believe it will underperform market expectations. The cyclical nature of the aerospace industry is demonstrated by Boeing's relative wealth chart. Boeing has consistently achieved CFROI above its cost of capital since the late 1990s, and since 2005 has generated economic wealth by consistent asset growth, fueling the increase in its stock price. The basic hold scenario implies a warranted price that is a 10% downside of the current market price. I believe this view of the company's prospects is too conservative and that Boeing's CFROI will be more persistent. To understand Boeing's future prospects and why they don't fit well with the basic hold scenario, we must analyze the three drivers of the relative wealth chart: sales, margins, and asset turns. Boeing has a promising backlog of orders and a degree of visibility regarding future sales growth. However, I believe the following issues have been underestimated by the market. Production problems and delays experienced with the 787 Dreamliner have led me to suspect that current production schedules may be over-optimistic given the complexities of next-generation aircraft and the continuing uncertainty over where the 777X will be produced. The popularity of the 777X may also prove problematic in the medium term, as a production gap is developing with the 777 as airlines are prepared to wait for the new fuel-efficient model. This has exposed Boeing to a potential loss in market share to its main rival Airbus with the next-generation A350 over the medium term. In the lucrative narrow-body segment of the market, I believe the long waiting times for Boeing's 737 MAX and the Airbus A320 may give smaller competitors such as Bombardier, Embraer, and the Commercial Aircraft Corporation of China an opportunity to steal market share. The defense division may also weigh on sales growth, as recent scandals involving US agencies may deter foreign governments from accepting tenders with Boeing. Lower labor costs are expected to drive margin expansion towards the sector median as Boeing continues to restructure its operations. Cheaper energy prices from the increase in natural gas supply in the US will also drive down the cost of production. By assuming that asset turns will stabilize at the 5-year median, I've been able to adjust consensus sales and margins forecasts to reflect my own expectations and derive a warranted price that is a 4% downside to the current market price. Over the long term, Boeing's innovative new designs and strong backlog may see it avoid mean reversion. However, I believe that it will face lower sales growth than expected and increased competition, accelerating its lifecycle fade and warranting an underperform rating.